Hello everybody, my name is Caroline Marakian, Head of National Accounts at Pepper Money. I'm absolutely delighted to be with you all today. Today I would like to discuss a segment of the mortgage market which is not discussed enough in my opinion, but one where a significant pool of borrowers do fall. And with a pandemic upon us, this segment is one which intermediaries cannot ill afford to ignore, particularly now when customers who may have been in the past mainstream find themselves in a situation where they need help from specialists. So the purpose of this session will be to look at how we as an intermediary community can support more borrowers with adverse to succeed achieve their aspirations around their home prospects. To achieve this, we will look at what is the adverse credit market, understand how, where and when people are likely to be affected, what does the future hold for the adverse borrower post-COVID-19, what do brokers need to know, what new opportunities are there for brokers, and then finally, how can Pepper Money help? If we start off by looking at what constitutes someone with adverse credit. So simply, all it means is the customer has fallen into the category of not being able to get finance from a mainstream lender, primarily because they may have a poor credit record, such as CCJs, defaults, missed payments on credit, bankruptcy, or an ongoing or previous arrangement with creditors, be that arrangement formal or informal in nature. But that does not mean that we shouldn't look to help, and there should be no need for embarrassment in this because there are so many people who are in this category. Nor does it necessarily indicate future delinquency. Invariably, a large proportion of customers who arrive at an adverse lender do so in good faith and often turn out to be extremely good borrowers. Sometimes it is just that the customer's situation or circumstances do not fit prime products and they have experienced short-term issues unexpected to them in the past, such as loss of earnings, divorce, illness or bereavement that affected their ability to service debts at that point. And we'll touch on this a little bit later on. So just how big is the adverse credit market? Is it a huge opportunity for us broker partners to really get a grasp over and try and help lots of consumers? Well, interestingly, during the pandemic, Pepper Money worked with YouGov to carry out some research using a sample of about 4,000 UK adults. The objective of this research being to stimulate increased awareness and greater understanding, as well as more open discussion about this area and the impact on securing a mortgage. The research for this latest report took place in August 2020, so at a time when lockdown had eased for most and the property market was reported to be booming. It was also a time when millions of people were still furloughed by their employer. The country had officially entered recession, and there were several question marks about the long-term impact of the pandemic on employment and the economy. So what did we learn from our research? Well, the very first learning was that the number of people with adverse credit has actually, in a positive way, fallen in the last 6 months, which is great news. In the last report, 15% of people surveyed had experienced credit problems in the last 3 years, whereas the latest research showed this to be just 13%. Having highlighted this positive trend, however, it does still mean, though, that there are 6.81 million people considered to have adverse, with 1.09 people looking to buy a property in the next 12 months, whether to live in or rent out, which shows the importance of us brokers providing the right advice and seeking out these consumers. And what about the impact of COVID on this area? Well, according to the research, 2.1 million people missed a credit payment in the last 6 months, and half of those people have missed several consecutive payments. Nearly half of people say that they did not have an agreed payment holiday in place when they missed these credit payments, and 75% of people who have missed payments without first agreeing a payment holiday are concerned that it will negatively impact their ability to get a mortgage in the future. The research shows that COVID-19, therefore, has had a more significant impact on those people who have experienced adverse credit in the last 3 years than the whole population. More than a third of people who have adverse credit say also that the amount of debt that they have has increased, which is not a surprise, I guess, compared to a quarter of people overall. And 37% of people with adverse credit said their income had decreased as a direct result of the pandemic, compared to 25% of people overall. Of those, again, with adverse credit whose income had decreased, 26% said it fell because they were furloughed, 18% had lost income through self-employment, 17% had lost their job, 15% said their income was reduced by their employer, and 6% experienced a reduction in income as a result of being unwell and taking statutory sick pay. So what does this mean for our broker community? Well, this means they are more in demand than ever before. Their advice is going to be crucial in helping these customers navigate the options that are available in achieving their mortgage aspirations. The potential adverse credit mortgage market may have fallen slightly to 1.09 million people now only needing or wanting to purchase property in the last 12 months, but more of this group will seek the advice of a mortgage broker. 66% of adults we found with adverse credit in the last 3 years who are looking to buy a property in the next 12 months would absolutely reach out for such advice because they are more aware of a broker's importance. And this is up fabulously from 57% in our last report and 40% this time last year. And this equates to 719,400 potential customers. So it's time for us to reach out. So if we are going to try and seek to understand our adverse credit borrowers and to try and identify them, our research aimed to try and understand the demographic of an adverse credit borrower a little bit more. However, the conclusion we ultimately drew, which is probably no surprise, was that adverse credit affects people from every area of society. Regardless of gender, age, or being associated with higher or lower income, anyone can find themselves with adverse credit, particularly when exposed to circumstances which are out of their control. But I'll give you some statistics to kind of give you further food for thought, I guess. In the first diagram, it appears that women appear to be holding more debt than men. I must admit this diagram always makes me either laugh or cry because this stat does not bode well when I'm trying to convince my partner I don't have a spending habit. But there's another interesting stat for you. Reversing the trend from previous waves of research, it also seems that the majority of adults to have experienced adverse credit in the last 3 years are from the less affluent C2 DE social grade, as opposed to the more affluent ABC1 social grade, although the split remains very close. In terms of age, the 35 to 44 age group has emerged as the most common for people who have experienced adverse credit in the last 3 years, with 29% in the group compared to 23% aged between 25 to 34, 20% aged between 45 to 54, and 19% aged 55 and over 22. Interestingly, in the last wave, the age demographics were more evenly split, with the most common being 35 to 44 and 55 and over, which both accounted for 24% of the group. And just looking at the most common reasons why these people have experienced adverse credit in the last 3 years, it looks like missed payments are certainly the most common form, with 75% of participants having missed a payment in the last 3 years. And I do actually feel that this trend will continue, as we can also see that 14% of people missed several consecutive payments in the last 6 months that resulted in default. So I do feel that this will be a growing trend and one that has certainly been brought on more by the pandemic. And in terms of the amount of current outstanding debt, what's interesting is that 40% of adults with adverse credit now say that they have debt of more than £5,000, which is up 4% on this time last year. And so this also intimates that the pandemic has certainly had an impact on their finances, but also what this message gives is the power of broker advice and us reaching out to these consumers to really understand if there are any alternatives or options to really help them maybe consolidate some of their debt and look to refinance to get themselves in a better position. So I talk about the opportunities for remortgaging and debt consolidation, but there are misconceptions held about adverse credit by a consumer population. And this is where I guess the power of the intermediary community constantly making consumers aware of the options available to them is going to be more than paramount than ever before. Because interestingly, the research tells us that 69% of adults with adverse credit in the last 3 years who are looking to purchase a property in the next 12 months with a mortgage are actually concerned about having their mortgage application declined due to their credit history. Completely understand. However, in reality, what we found was that only 7% of homeowners who had experienced adverse credit before buying their current property said that adverse credit resulted in a declined mortgage application. So there remains, therefore, a significant perception gap between the number of people who believe that adverse credit will result in a declined mortgage application and the number of people for whom this has actually been the case. And this misconception can be seen in this slide here about the impact of adverse credit on the ability to successfully apply for a mortgage, which is demonstrated by incorrect attitudes to the impact of a CCJ. What's interesting is our research found that 27% of people surveyed think that they would have to wait longer than 5 years to apply for a mortgage after being registered with a CCJ, which is slightly up from 12 months ago when the number was 25%. But the actual message is the reality was that many lenders are able to offer competitive mortgages to customers who have been registered with a CCJ as little as 6 months ago, like Pepper Money. So our research wouldn't be so extensive if it didn't look at these potential impacts that adverse credit may have on a customer's ability to get a mortgage before purchasing a home. Because if we don't understand the impacts, then we can't make changes. But actually, looking at the ways that this did impact their mortgage application didn't really make any reasoning for not applying. 15% said that it reduced the options of the mortgages available to them, which is considering understandable based on the fact that obviously we've got a number of mainstream mortgage lenders that outweigh specialist lenders. 17% said that they had to use a mortgage broker, which I don't think, again, is anything to worry about, because actually the power of advice from a broker, being able to look at whole of market, is a great thing to do. 15% thought it made the process of applying for a mortgage longer. And in current times, mortgages do tend to take longer. 18% were asked to supply more paperwork than normal when applying for their mortgage. Again, nothing of major panic. If we look at a self-employed client, for example, we typically ask for more paperwork there to understand their circumstances. And 10% of respondents surveyed also said that they had to pay a higher rate on their mortgage. And again, nothing of surprise there due to the higher risk, I guess, that a lender is taking on. So, massive opportunity for us as an intermediary community to raise awareness to these consumers as to how we can really help them gain their home aspirations. So moving on very quickly, just to give everybody a flavour as to how Pepper Money is able to help with this situation. So for those of you who don't know much about Pepper Money was set up in 2015 in the UK. We're actually a worldwide lender for those who may not know us. So we're based in all sorts of countries such as Australia, Japan, Ireland, Cyprus. So we are spread out all over the world, and in fact in some countries we are classed as one of the top 5 lenders. We look to help in the UK customers who don't quite fit the mould of the high street lender, whether that be through a failed credit score, recent blip on their file, or more severe adverse in the past. We provide a range of residential and buy-to-let products. We provide innovative criteria to help you attract and retain more of your customers. So what we will do is work with you to provide solutions to those who we feel are underserved borrowers in the market, such as those with impaired credit. And the beauty of our processes is that we manually underwrite all our cases and we do not credit score. And there are endless specialist customers to help. So obviously those with impaired credit, but those who are contractors, self-employed, first-time buyers, those with little credit or too much credit, later life borrowers, portfolio landlords, you name it. We are able to help a vast pool of customers. So where can we help you with the adverse credit piece? So if I just give you an overview of our residential range. So the first thing we do is we do not auto cascade. So the product you see is the product you get. I do know with some lenders that you can select a product only to find through application that the product needs to get changed. We at Pepper Money do not need to do that. We lend up to 85% loan to value with a maximum term of 35 years. We will capital raise for any legal purpose, including business use, but sadly to caveat that, not tax bills. In terms of debt consolidation, we have no debt to income ratio. Earned income is accepted to age 75, and we offer interest-only options, so up to 60% loan to value with no further stipulations to criteria. And sale of main residence is accepted as a repayment vehicle with no predefined minimum equity. In relation to adverse, we have a transparent range based upon the registration date of the latest CCJ default or secured missed payment. So we take a very time-based approach, making our product range really easy to understand. So you will see a Pepper 6, a 12, 18, 24, 36, 48. CCJs and defaults can be looked at so long as the customer has had none in the last 6 months. CCJs and defaults do not need to be satisfied, and we do not have a volume or a value limit. In terms of unsecured arrears, if a customer has a fixed term, we ask for none in the last 6 months. And if they have revolving credit, missed payments will be considered. And debt management plans are considered up to 75% loan to value. And in terms of buy-to-let, again, we look at a straightforward, sensible approach. We lend up to 80% loan to value, and that includes for first-time landlords and limited company buy-to-let landlords. We do not stress test the background property portfolio. So long as it's self-funding, we ignore it. We look at the pay rate of 140% on a 5-year fix for private individual buy-to-let, irrespective of an applicant's tax band. It's 125% of the pay rate on a 5-year fix for limited company. An SPV can be set up day one with no minimum trading period required, and there is no cumulative loan-to-value gearing limit on the background portfolio. Another good point to note is that the market rental figures can be used as advised by the valuer rather than the rent received. So there may be possibility where somebody is receiving a lower rental amount than the market rental value. So again, affordability can be uplifted, which is a great thing. One thing I'm extremely proud of right now is around our service. I would class ourselves as one of the market leaders in this area because we are turning cases around very quickly, and actually we are finding lots of brokers are absolutely satisfied with the experience that they're facing. What is the winning piece in this is that you get a dedicated case owner who will look at your application and look after you from application to offer, and they are available on the phone whenever you need them. And also, where would we be without our fabulous sales team who are out on the road? So we have a fabulous team of 7 regional development managers. So please reach out to them if you'd like to find out more information as to how you can help your customers with impaired credit, or just to pick up to find out how you can use Pepper Money. Just a very brief example of one of the cases that we have recently helped with. So we had an application very recently to raise capital for debt consolidation. It was 2 applicants, Nikki and Jacob. Now, Nikki and Jacob had a life event as they were setting up their business 3 years ago, which resulted in them sadly getting 2 CCJs totaling $25,000. Now, the 2 CCJs were registered against them 26 months ago. But we were able to help with Pepper Money, give them an 80% loan-to-value mortgage to allow them to clear their outstanding debt associated to their business and some wedding costs. So an illustration of just the type of customers that we are able to assist. Do we do what we say we do? Here's just an example of one of the testimonials that we've proudly received at Trustpilot. Feedback for us is extremely important. I was really delighted to see this testimonial, of which we've actually very recently received hundreds, purely because brokers are recognising the exceptional service that they are receiving via Pepper Money. And that is one of the things I'm truly proud of, particularly right now when I'm very conscious that a broker's capacity has been stretched due to lenders' turnaround times. But as I alluded to earlier, our turnaround times are exceptional due to the fabulous case owners that we have on board, as well as the BDM team. So please reach out. As I look at this one, it says, given the current climate we're facing, I have to say that Pepper Money have been my standout lender. So please do reach out if you have a case that you think a customer would really benefit from using us. Think of us. And again, a snapshot of a testimonial on Trustpilot. I won't read it now, but it's just worth evidencing, obviously, the exceptional service that we have. So just to wrap up very quickly, so as we have seen, there are an increasing number of borrowers with adverse credit who are falling off the high street through no fault of their own. So the message is very loud and clear. Just because they have adverse credit does not mean they are not eligible for a mortgage, as we found out from our misconception study. In fact, there are numerous lenders, inclusive of Pepper Money, to be able to support such customers succeed and achieve their ambitions to obtain a dream home, or even remortgage so that they can achieve their home improvement ambitions. There is so much support out there. So broker partners, if you haven't got a dedicated contact from a specialist lender, do it and embrace specialists. Thank you very much for listening and have a great day. Goodbye.